Hey everyone, welcome back to Yuri's Box. In this video, I'll be talking about gold. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So to give a quick answer to the video, is it time to short gold? No. I mean, generally speaking, if you've followed my previous videos, you'll know I'm not a huge fan of leverage at all, or even just, again, as far as short selling is concerned, I'm not a huge fan of it. I'm better off just steering clear of anything I do not deem, interesting or at a point at which I would buy into. Now, does that apply to gold necessarily? Well, I'll kind of divide the video into pieces. Where we are now and where I think we might be going with gold. Where are we now? Well, we had a decent pullback. All right, this was about a 10%, 15 was that? 11%. 11% pullback from the high on April 22nd. We backtested really, you could argue, this previous high we made prior to Liberation Day. Now, could we see some follow through? Absolutely. Absolutely. Again, this candle is, I want to say problematic, but again, topping tails, generally don't really bode too well. But again, you could also argue that, whatever had to come after this candle right here already happened, all right? And we could be just, charging the batteries, recharging, and we're all going off onto the next leg of the gold bull market, which is absolutely possible. Now, just to put things into context, in the right context, I think that, is this the time to get max long on gold? Probably not. The move really started in February of 24, if you remember, and what really acted as a catalyst back here was the Iran-Israel basically exchanging firecrackers overnight. All right, and again, this bull market will continue until there is uncertainty in the space. The only thing gold is correlated to is uncertainty. If people feel uncertain about where we're headed, gold is usually a great asset to own in that scenario. So again, I think that as long as the data is quite murky, meaning that, yeah, you have indications that we're in a slowdown, of course, and I've spoken about that many, many times. But again, do we have a smoking gun? Do we have anything that is smacking us in the face with negative data day in and day out? Not yet. So that really still potentially bodes well for gold. But again, me personally, I'm not as constructive there. I got it right on gold as I was potentially back here, right? Back in in 2023, and that really leads into the second part of the video, which is where might we be headed. And I think that the best example, again, I've spoken about this scenario various times, is something like, and I'm 2006, 2008. Now, I'm not arguing for a housing bubble or crash. I'm not Michael Burry, right? There was only one of them. One's enough. But what am I talking about? Well, if you look at the moves, really, they are quite similar. All right. In 2005, you have this first breakout in gold, first significant top, May of 2006. Then you have basically a sideways chop. And then you have the final breakout. We reached the top in March of 2008, which was basically coincided with the collapse of Bear Stearns. Now, fast forward till today, you really do have, similar move, all right? You kind of have a first move up, right, in July of 2020. Then you basically go sideways for a couple of years. And then you have the breakout, and you go into new highs. Now, is this the top? I think you will know when the top is in, whenever we get any kind of resolution on the economy. As long as we're in this state where, are we definitely in a recession? No. Is inflation not cooperating as we perhaps might have liked? Yes, we have had some positive news on the inflation front, but you could also point at the inflation expectations on all the surveys that we have. They are rising, and we at the very least have the saber rattling, the fear that inflation might be coming back. And as long as you have these two things coexisting, that they just fuel uncertainty. And as long as uncertainty is one of the prevailing forces in the market, well, gold will continue on its merry way. And no matter how hard I squiggle on a chart, definitely gold will be stronger than my squiggles and my opinions. Having said that, again, if we get some kind of resolution, anything that kind of just tells us with definitive fashion that we are headed towards perhaps some kind of a resolution on the economy, meaning some kind of a landing, I would expect gold to take the back seat, just like it did in 2008. In the lead up to 2008, gold performed extraordinarily well. It wasn't until we knew where we were going that gold really just started to, kind of falter quite a bit. All right. Yes, we had another rally right here in June and July. You could argue this was kind of the stagflationary, environment. Those 6 to 7 months where inflation was going up. Uncertainty about the economy was going up. But I think that mainly that played out right here. But regardless, gold still had its few, its 15 minutes of fame. But eventually it resulted to the downside. And it was just a source of liquidity for, market participants. So that's the way I'm viewing gold. It'll go up until, in my opinion, and I could easily be wrong, but again, this is the way I'm looking at gold. It will continue to go up until we have a definitive answer as to where we're headed in the economy. Are we headed towards, basically the status quo, where we are in a slowdown, but growth is still kind of hanging in there? And then, if that's the case, Bitcoin, gold, Freudian slip there. Gold can continue to move up. Could we see gold at 4,000? Absolutely. But if in the meantime we get economic data that starts to point south, the chances of a top in gold rise. So really, bad economic data is kind of what you don't want to see in gold, in my opinion. You want to see kind of the status quo. All right. This uncertainty, if you're particularly bullish gold, what you want to see is uncertainty take hold. Now, again, this is if you are more focused on the short term. On the long term, just let me just zoom out. Gold is something you want to own. I personally like gold. I love gold. I love hard assets. Gold. I definitely do put Bitcoin in that category as well. But is this the point where you get absolutely max bullish? Probably not. All right. Is this a point where you get max bullish? Probably not. Same thing with Bitcoin. Is this the point where you get max bullish? Again, these assets are definitely stronger than my opinion. So again, we'll see how things play out. But again, as far as gold is concerned, that is how I'm going about things. As long as uncertainty reigns supreme, gold will definitely have its fun, and we've definitely seen that as in the last barely 2 years at this point. I'll leave it at that. Just to summarize, again, we had a sizable correction. A 10% correction is healthy, in my opinion, during a bull market. Ideally, if you want to, get picky about things, but which you definitely shouldn't, you would like to see it to backtest the bull market support band, because definitely when things start to get a little bit, out of hand, eventually, you just kind of find yourself, coming back home and kind of, taking a bigger rest than you would have otherwise. So that is the present. Sizable correction could lead to further upside if, in my opinion, we continue to see uncertainty reign. And how can you tell if gold is likely to be in a topping phase? Well, I would look at the economic data. If the economic data starts to turn south, meaning that we are getting smacked in the face with, say, initial jobless claims staying stubbornly above, at the very least, 250,000. Payrolls that start to go below 100K, and the unemployment ticking up like it did last year, I would expect to see gold kind of follow the exact playbook that it followed in, for example, 2008. So look for certainty as, gold's kryptonite, if you will. I'll keep this video short. If you like this kind of content, consider leaving a like, and I'll see you next time. Bye.